Alright, अब हम लोगों को क्या करना है जनाब? अब हम लोगों को alright, now we have to look at the internal audit. So firstly, we need to look at the definition of internal audit. So let me write it for you. The definition first. Internal auditing is an appraisal or monitoring activity established within an entity as service to entity. It functions by, among other things, examining examining, evaluating, and reporting to the management. And reporting to the management and directors on the adequacy and effectiveness and effectiveness of components of accounting. And internal control system. Right, so far so good. Now let us look at internal audit and corporate governance. Established code of corporate governance such as UK corporate governance highlight the need for business to maintain good system of internal controls to manage the risk company faces. Uh, and the internal audit function can assist the board in other ways as well. For example, by being the expert in the field, such as auditing and accounting standards in the company, and assisting in implementation of new standards. All right. Further, by liaising with external auditors, where external auditors work reduced due to internal auditors, and therefore it will reduce the cost of external auditors by acting as auditors. For board report which are not audited by external auditors. So far, so good. Then we need to look at assessing the need of whom internal auditors. So we need to assess the need of internal auditors now, and so as we know all that internal audit brings the effectiveness in the board. So, but therefore, board need to assess whether they should set up internal audit board in the organization or not by looking at the following factors. And what are the factors though? Number one, the cost versus benefits. Cost of setting up internal audit department uh, versus the benefits you will get. Number two, complexity and scale of organization, activities, and supporting system of those activities. Number three, management perceived need, management perceived need for assessing risk and internal controls. Assessing risk, sorry, risk and internal controls. Number four, whether it is effective to establish department or it should be outsourced. It is effective to establish department or it should be outsourced. Lastly, the pressure from shareholders, or you can to establish internal audit. The pressure from shareholders to establish internal audit. Obviously, internal audit department, though. Then let us look at the difference between internal audit and external audit. Difference between internal audit and external audit. So there are many similarities between internal audit and an external audit, though there are few differences between them, right? And what are the differences? Let us look at them. Um, here, internal audit, yeah, external audit. So, yeah, uh, internal audit. They are employee of company. External audit. They are not employee of company. Internal auditors get the salary. External auditors get fee. Internal auditors are appointed by management. Uh, External auditors are appointed by shareholders. Okay. Internal auditors mm, report on organization functions, while external auditors they report on financial statements. For internal auditors, it's not necessary to be part of professional accountancy body, but for external auditors, it's necessary to be a member of professional body, professional accountancy body, right? So I hope that's clear till here. Now let's move on and look at the other stuff, that is the scope of internal audit function. Scope of internal audit function. So as far as the internal audit function is uh, are concerned, the scope is concerned, what we will look at, they have two main functions uh, in the risk management of the organization. One is they has to they ensure company risk management operating effectively. Other is they ensure that in strategies implemented in respect of business risk operates effectively. So far, so good. And according to UK Combined Code, internal auditors should identify the business risk that may affect company's operation to operate effectively, while internal auditors should also identify those risks which determine company policy and implement strategy to minimize those risks. Now, let's look at the role of internal audit. As far as the role of the internal audit is concerned, number one, it monitors the company overall risk management policy to ensure it operate effectively. Company overall to ensure it operate effectively. It operate the strategies implemented to ensure that they continue to operate effectively. Also, they has the responsibility of fraud and error as well. While it is the while the responsibility of fraud and error, the responsibility of fraud and error is with directors, while internal auditors, while internal auditors responsible for internal control system, while assessing the internal control system, though while assessing the internal control system, they should assess risk of fraud. Okay, so far so good. Now let us look at the assignments of internal audit. All right. Now we have to look at the word. We have to look at the internal audit assignments. Internal audit assignments. So as far as the internal audit assignments are concerned, internal audit can be involved in many different assignments as directed by the management. So there are a number of assignments in which auditors could involve in. Number one, we can have value for money, which is also known as three E's. Okay, so in three E's, value for money audit examine three E's. What are the three E's? Three E's are economy, efficiency, effectiveness. Effectiveness. Okay, and these three E's can be defined like as follows. Uh, Number one, economy, obtain input at lower cost. Number two, efficiency, get the maximum output. Effectiveness, um, the desired result is achieved, right? So, but for example, let me give you the example on it. Let's say you are traveling to a car, right? And as a fuel, you use in car one, you use petrol. Okay. Uh, in 100 rupees or in dollar 100, it helps you travel for 10 kilometers, right? But in car two, they used LNG. In dollar 100, it helps you travel for 20 kilometers. So see, it using it you obtain the output at lower cost. You get the maximum output by traveling for more kilometers, and the desired result, the traveling, is achieved. So that's the three E's. But there are certain problems with VFM audit. It is difficult to measure output, economy, and efficiency most of time achieved by sacrificing quality, most of time achieved by sacrificing what? Quality. It is difficult to measure effectiveness in service industries. For example, in a, how you will measure effectiveness in accounting firm, or how you will measure effectiveness at hairdresser or in a restaurant, right? So these are the problems with it. Now, then we have IT audit. Now, what's IT audit? IT audit is test of controls in specific areas of business. The computer system increasingly in modern system. In modern business, computers are vital function of the business and therefore control over them are key to business. So if there are various areas of IT which might be subject to test of controls by auditors. And what will be the test of controls by auditors in it? Let's change the color now. Yeah, purple. So e-business, operational system. Oh, yeah, operational system, access control, uh, capacity management, um, asset management, network, problem management, system development process, data management system, etc. Right. Uh, so now, as far as the best value audit is concerned, as far as the best value audit is concerned, is performance framework introduced in local authorities by UK government. They required to publish best value performance plans and review functions over the 5 years period. And the authorities are required to strive for continuous improvement by implementing 4 Cs. So what are the 4 Cs over here? 4 Cs actually. Now, the 4 Cs, number one, challenge, in which you have to consider how and why service is provided. One, to compare. You have to compare. Okay. Right. Next is compare. In comparison, we have to make comparison with local authorities and private sector. So comparison will be between whom, uh, local authorities and private sector. Got it. Now, next is consult. Consult, talk to local taxpayers and service users, wider business community in setting what performance target, and consult, and then we have to compete. What we have to compete, uh, to enable, we have to embrace the fair competition, right? Fair competition regarding this as means of securing efficient and effective services. Um, then we have financial audit. Okay, in financial audit, it involves all the available evidence to substantiate information in management and financial reporting. Substantive procedures will be conducted in it. We will look at the substantive in more detail in upcoming lectures, and then we have to also the test of controls, which we will also look in more detail. Okay, so by internal auditors, the importance of controls in preventing financial reporting errors mean that it is necessary to review certain areas regularly to ensure relevant controls are in place. Okay. Following areas need to be reviewed by auditors, including. Let me give you the examples on it, like on cash collection, on acquisition and expenditures, uh, acquisition and expenditures for processing surrounding purchase orders, how are receipts, liabilities, cash receipts are recorded, vice versa. We have to look on external reporting. External reporting, how the financial reports are prepared, unusual items, is there any, how the accounting policies are selected, controls over financial reporting, then financial capital and payment. Financial capital and payment, purchase or sale of investments, recording stock options and treasury stock. Finally, we have in it personnel and payroll. In personnel and payroll, we will look at the like starters and who are the starters of the organization, levers of the organization, or how the payroll is running and how they are paying to the employees, how the tax returns and payments are given, authorization of payroll rates, additional and deductions, that sort of stuff, right? Um, Finally, we have the internal audit reporting. So, internal audit reporting, to whom they will report? They will report to the directors or audit committee. See, I'm writing or. So, to directors or audit committee of the organization. There is no formal format of internal audit report like external auditing reports. Okay, and then we have outsourcing. What is outsourcing? Outsourcing means use of external suppliers as a source of finished product, service, or component. Okay. Organization can outsource the internal audit department after looking at the various factors. What are the factors? Well, obviously, number one, cost versus benefits. In cost versus benefits, cost of setting up internal audit department versus outsourcing cost. Number two, are the resources available? Resources available to set up the department or not. Number three, time get to require the resources. Time required to get resources. And lastly, but not necessarily leastly, the benefits of setting up department. Okay, and lastly, now let us the look at the advantages and disadvantages of setting up. Advantages and disadvantages of what? Uh, Outsourcing. Advantages. Here we have the advantages, we have the disadvantages. All right. Number one, the advantage. No need to recruit staff. Number two, uh, the service provider has specialized skills. Number three, training cost will be saved. Number four, uh, the service contract can be for appropriate time. Last advantage, it can be used for short term basis. Short term basis. Lastly, now let us discuss the disadvantage. There will be independence and objectivity issues. The cost of outsourcing and the cost of outsourcing the department can be high. Company may lose in-house skills. The outsourced staff may have limited information about company. And lastly, there may be high staff turnover in audit department, right? So that's it, folks. I hope you get it, this chapter, and we are done with internal audit. See you at the corner in the next chapter.